welcome to the show, gentlemen. Thank you for kicking us off today. Day 2, Breakpoint.
Thanks for having us.
I mean, you guys have been like hustling here all week. I've seen you on all sorts of screens. I've seen you in all sorts of rooms. I know you guys have been around at the Solana ecosystem for a while. Maybe we just start off with a bit of reflections on kind of where we are today in both Solana and crypto. Like, what is this like, having been around since the early days?
Yeah, I mean, we joined the Solana ecosystem thanks to friends like Austin, who is deep in our community actually, which is really great. There's some great lore there with Austin and Helium. But yeah, we joined the Solana ecosystem because honestly, I was tired of carrying a pager for an L1. But really, like we realized that we didn't want to build both the wireless network and a blockchain network. That seemed like when we were focused on building this wireless network, that's what we really should be spending all of our time on. We've been embraced by this community. We use a lot of the tech. I remember day one when we migrated over, we had teams coming over to us and saying, how can we help? The Jupiter team, sort of notable, like we launched all of our tokens and everything just worked magically. The Camino team, the certainly Solana Foundation at the time, everyone was just like super excited and willing to just like give, which I think is like really very much so the case in Solana even to this day. There's a lot of giving, and so we obviously try to give back a little bit too. We had a nice little kickoff party for folks here a couple of days ago, and hopefully folks are able to come out to that and have a little fun there too.
I mean, Austin, I love that fact that you were like deep in the trenches, and so like you were fighting the battles on the timeline long before you jumped over to DoubleZero. So I'm curious what your sort of reaction to being in front of an arena here today is.
Yeah, each breakpoint is the biggest and best breakpoint anyone's ever done, and this year is no exception.
It's the true up only.
Seriously, it is the iPhone of crypto conferences. But it is like it's pretty incredible to be here at an arena and to see just almost 7,000 people coming to attend this thing. There really is no other conference in crypto that comes even close to the level of fit and finish and polish and production, let alone the number of attendees. I mean, you've got things like Token 2049 Dubai, which obviously draws a massive crowd. There's something different about Breakpoint still, and no other L1 or L2 has pulled off anything close.
Yeah, I mean, maybe before we kind of dig into some of the more nuanced questions we have, can you guys just kind of give us the smooth brain narrative of the opportunity you're each running at, just to level set?
Smooth brain
first. Okay. I want to give everyone a free phone plan, and I want you to have connectivity everywhere in the world. That's the simplest way to say it.
Great. Yeah, we are building a new internet.
You guys are just like, oh, super easy thing. Perfect.
Yeah.
Okay. Yeah. I mean, I love that you guys have workshopped that very, very carefully over the last little while to get it down to the smooth brain. Okay. So I think, when Josh and I were thinking about what to get into here, I think like the high level is, I think this sort of question and challenge we have around this, like a core concept that I think has been core to crypto for a long time and is maybe being questioned a little bit. And I think you guys have lived this in a really interesting way. And that's sort of the idea that tokens can be these incredible incentives to bootstrap network effects, either through software or through applications, or in your case, through hardware. And yet we've sort of seen a big move away from that over the last year, right? The airdrops are not the thing anymore. We have ICOs that have returned. And a large part, I think people are asking the question of like, well, what makes a token valuable? And I think that those two, and I think that maybe the answer to that is this, this idea that there is some business value that will flow to it in the future, and that if I want to be confident holding this token, I'm starting to do some math around emissions and around unlocks and around, how do I build confidence in this underlying thing? And so this is, to me, it kind of comes into conflict with this core exciting premise of bootstrapping these physical networks using token incentives, with this sort of idea of like, how do I think about holding these tokens long term? So I'm curious, maybe if we start there. The question maybe is what makes a token valuable, but I think as it relates to DePIN, there's maybe a more interesting piece there.
Yeah, there's a lot of ways to answer this question. What makes a token valuable is that it's valued. And that is the entire thing at the end of the day. The greatest meme coin ever created is Bitcoin.
Amen.
It's just a mind virus that everyone agreed was important, and it has continued to be the best performing asset over the last 15 years. And there's no reason for it, right? But that's fine. Like, these things don't have to have, like, every time we try and back into what is the intrinsic value of the US dollar, you basically end with like the US Navy, right? Like, that is the only reason the dollar is worth anything, is because we have a giant Navy that keeps global trade routes open, right? And that is what creates a national reserve currency. You can take the same approach to crypto, right? Which is like, Doge has no intrinsic value, but that's not a problem. Like most of these things are not. Gold has no intrinsic value, right? The utility premium of gold for like electronics manufacturing versus like the market price of gold, there's no way to back into a valuation of gold that makes any sense. One SOL is either worth $5 or $5,000, and nothing in between really makes sense on a pricing dynamic. And so, but to get to your actual question, which is like, tokens are, I think, the next greatest unlock we've had in how to construct human alignment. So we originally started out with human alignment being like effectively like the serf program, right, in like the Middle Ages, which is like, I'm a rich guy, you're going to work for me for free, but you're going to have a house and some food and only have to work a few days a week. And like that was the best way to organize collective labor without a monopolization of violence as the primary driving function. We move forwards into the invention of the joint stock corporation in Amsterdam, and the idea that like making a ship to go out and like acquire some resources through questionable means is a very expensive endeavor. And we invent the idea of investing in a share of a company to create this shared ownership model. You fast forward that to the stock exchange. What you really get to now with crypto is tokens are the best way to create alignment among non-aligned actors towards a common outcome that weaponizes greed and capitalism for positive sum outcomes. And that is entirely the point of a token.
History lesson here.
I mean,
let's go.
That's perfect, right? And so I guess the next question there is like, what happens next, right? Like, we have these tokens out there. What do they do? How do they continue to be? Who is the next purchaser of this thing? Why do people hold it? Ultimately, it's about ownership, right? They believe in being a co-owner of these things, these protocols, ultimately for us, these physical networks that exist. And it's a way for them to participate, either participation in our case by, actually providing utility for the network and being paid for it, participation by owning this thing and owning sort of the future cash flows potentially. Like these are the kinds of things that people, want to have access to, and they don't want to have access to it between, 9 a.m. and 4 p.m. on certain days, and and sometimes half days because it's the day before Christmas or whatever, and definitely not on weekends because no one does anything on weekends.
God, I wish.
all these things like are such, they are this sort of like classic thing where bureaucracy builds on bureaucracy, and like it's because things were hard and then we just kept building on the hard things, and then we ended up with this like state that is like, hold on, how do we get here? It's because the layering happened over the years, and the layering is understandable. It's human nature to sort of build on the thing that already has before, but why not, like, let's take a step back and let's give access from the beginning to everyone at any time wherever they are in the world.
Yeah, I mean, the great thing about crypto is you can go to church on Sunday and get liquidated, right? Like, but genuinely, like that is like it's a little facetious, but that is a massive unlock. The idea that we're no longer limited by a few time zones that have been dictated by historic precedent. Like these markets are 24/7, 365. I do think, though, maybe the more interesting question is not what makes a token valuable, but what makes a token not valuable. Because when you issue a token, you're effectively issuing a debt instrument. Right. So like in the case of DoubleZero, we have a contributor network that's probably spending over $20 million a year on the operating of that physical fiber network to build a new internet. Now, we're not paying that cost. We didn't go out and raise, $200 million and have all this money to pass out to people. Instead, we have tokens. And the tokens are in some way a debt instrument that says, hey, you're going to participate in this network. You have tokens for it. That is your ownership, your alignment over the long term for this project. And as the project grows and evolves, tokens do what tokens do. And that is like I think that's the right way to think about these things for ambitious projects like Solana, like Helium, like DoubleZero, is that tokens are just an incredibly capital efficient way to launch incredibly ambitious projects without having to go and sell 80% of your company to a bunch of venture capitalists that that are gonna give you a bunch of money to go build the thing.
Yeah, so I love both those answers so much, but we've also seen DePIN categorically underperform, at least in the last little while, compared to other tokens. So I'm interested in, like, does DePIN need to figure out how to get more monetary premium or integrate memetics more into what they're building, or are we just early? Like what?
So DePIN is the easiest thing for investors to bid curve. Right. DPIN is the thing that looks closest like, oh, well, what are my revenue inputs? What's my P/E ratio? What utility am I gaining out?
Because you actually have revenue. Like,
Right,
you're
like,
building
you actually have
business.
real
Like,
revenue.
yeah. Right.
It hurts.
Sure, but if crypto were
Allegedly.
actually modeled on a PD ratio, like Santiago's kind of right? Everything would be worth basically zero, and DPIN would be by far the highest value token in the space because it has actual revenue input, setting aside like the perps dexes and things like that. But that's not the right way to value these things. But I think because DPIN has that ability to mid-curve much easier, like no one's gonna sit down and build an Excel sheet about what the price of Doge is gonna be, right? Like it doesn't work that way. But because you can do that with DPIN, I think there's more of an instinct for that. The other thing about DPIN is it has the opposite value accrual curve of a DeFi protocol. A DeFi protocol generates 80% of the value with 10% of the adoption. Right, you get trading through the system, you get some adoption, things are go, boom, Uniswap, Jupiter, Jito, all these things rush up. With DPIN, it's the opposite. The network is almost useless until it becomes extremely useful. And you see this on Helium, right? The early days of Helium, the coverage was pretty bad, and no one was reasonably going to say, I could use this for my cell phone plan. Same with DoubleZero. If we only have a few cities wired up and 5% of the Solana network on it, it's not actually that useful to a validator operating on it. But you hit these inflection points where everything changes.
So a lot of that sort of early belief, I think, comes down to this narrative of ownership and the understanding that, or the belief that people value that ownership. I would argue that over the last year, that value has been seen, I guess, maybe it's at its lowest point. We don't see that as being like the core topic, maybe in the way that we saw it in cycles past. So I'm curious, you guys sort of sit at two interesting, slightly different angles on the market. One is, I would say, talking to more B2B or sort of, it's called corporate buyers. Helium, you guys definitely have a big retail consumer focus here. I'm curious what in your communities or in your conversations, how is that ownership narrative emerging? Am I misunderstanding from just smooth braining the timeline right now and thinking that ownership isn't as valuable today as it once was?
I mean, I think the reason why ownership isn't as valuable is really the narrative in crypto specifically has been around, like the very, very quick, like let's get in, let's get out kind of token launches. And when I start talking to folks, I've been trying to talk less to the crypto folks and more to the traditional like TMT investor, because they're the ones that can truly underwrite the TMT, like the telco investors. Like they're the ones that can really underwrite like what is like actual OPEX and CAPEX of operating a massive global infrastructure network, right? They're the ones that can sort of see these things. And, you don't have the, XKKR, X like Silver Lake type guys in crypto, not yet. And I think we'll get them eventually, and they're probably playing around on the side on this stuff. But they'll, I think they're the folks that like really truly understand the ownership model more so. And then the folks that have been supporting these networks along the way also see the benefit of that. And I think that's sort of my sort of message to the average retail crypto investor here, which is that look, like we are not quite at that inflection point. I would even say Helium's not quite at that inflection point. 120,000 mobile hotspots in the United States is certainly not enough to have a nationwide network. That's why we partner with an existing national carrier. But I think as that network continues to expand and as for us, it's just pure utility. If there's data, there's some HNT that gets paid. And that's like the really simple thing to tell the average retail investor. And then for the TMT investor, it's like, this is a much, much more efficient way to build massive networks. And it's not, Verizon going and putting up the first iteration of 5G and then having to rip it all down because the standard changed within a few months and like put up another, spend billions of dollars to put up another set of 5G towers. That's not what you have to do with Helium. And we have this like incredibly flexible network that supports that. And that investor underwrites that.
Interesting. Is it different for you, Austin, when you're talking to what I would imagine to be very sophisticated users, financial actors?
Yeah, the interesting thing about DoubleZero is it's a lot of things to a lot of different people, right? And so if you look at it from the perspective of a Solana validator, it's a faster internet that allows the network to move faster than it could currently. It can support millions of transactions per second, and we're there with the validator software client, but the public internet is the limiting factor for letting blockchains exceed the speed they can run at today. This applies to pretty much every other blockchain as well. This even applies to centralized L2 systems. The public internet is their limiting factor. At the same time, though, you really look at it from a trader perspective, and the point of DoubleZero is to make someone with a $300 a month server they're renting in a data center able to compete with Citadel. And that really is like we have high frequency trading firm grade fiber in this network. We have this global network that can reach more places. And this is really like the interesting thing about crypto is for the first time in crypto, decentralization is not just a security benefit, it's going to become an actual market structure benefit. Because there's maybe 10 financial centers in the world that really truly matter. An HFT firm can go in and wire all of those up, and Wall Street doesn't run on the public internet. It all runs on dedicated private bandwidth. But if you just look at Solana, it's running over 300 data centers all around the world. And so it's just not economically viable for Jump or Citadel or Galaxy to come in and wire up all these locations. They need to do infrastructure sharing. They need to pool resources on this. But the DoubleZero network is a neutral network run by 15 independent network contributors. And because of that, no one has an advantage relative to anyone else. And so it really is about leveling the playing field and giving the small traders the advantage to compete with the large traders. But who benefits from that? Well, if right now, market making in crypto is quite expensive and quite risky, and that's why spreads are generally quite bad relative to like Binance or something like that. With DoubleZero, you bring this determinism that you get in traditional financial markets. A market maker always knows how long it's going to take to get a transaction in and talk to a leader, so they can quote tighter. We can make markets move faster. And suddenly we start to see price discovery moving away from centralized exchanges and moving on to decentralized networks. And all this is like not possible unless you address the core of the problem, which is that fundamental underlying infrastructure network. The cool thing about DoubleZero is we built it for blockchain, but it's not just for blockchain. You can use it for any type of high performance system. And so the question kind of there is like, how do you value something like that? How do you think about ownership at that level? There's a lot of different ways to look at it. And so I think what we are really focused on is utility and adoption. And, there's a lot of emergent business models that are coming from this, many of which are going to be built on top of DoubleZero, not by us, but by, contributors that are deploying custom systems on top of it. And that's, I think, what's really exciting about this space is every time you see a 10x reduction in cost or a 10x increase in performance, you open up entirely new business models that were never possible before. This is the story of Solana. The idea of a 10,000 NFT drop was impossible to conceive of on Ethereum. The idea that 500,000 meme coins would be launched in the month of April was inconceivable on any other network. And here we are today, right? Every network is now following this path.
Yeah, maybe on that adoption point, I'm fascinated about just like the kind of tactical mechanisms of network bootstrapping.
Yeah.
And that's hard enough if you just have two sides of internet buyers, but you guys have, I mean, in your case, you have kind of three, like if this is a multi-sided marketplace, you have two, and you integrate hardware into the equation. So I'm very curious what you guys have learned about bootstrap, like taking a network 0 to 1, maybe mistakes you've made, and maybe Abhay, I'll start with you since you've been at this longer.
Yeah. Well, we certainly made many mistakes along the way. I mean, I think we've also learned and been able to apply those to the sort of later stages of the network. I think the mobile network, we are showing that, we don't need necessarily what we call proof of coverage for the mobile network. The demand is already there. But for the IoT network, since it was a completely de novo network and a new, even wireless protocol and brand new hardware stack, people wanted to know that it was there already, and so they needed to have this sort of breadth of network before they would be, willing to put on their package tracking system or their temperature sensing system onto this completely untested network. So I think learnings here are you have to get to product market fit as fast as possible and get to the demand side as fast as possible. I mean, I think you guys did a good job figuring that out with validators, and we did that with phone plans, right? Like the fact that, we also launched a carrier in the United States at the same time as we launched the mobile network, I think is why we have been so successful. And now, you have folks like AT&T looking at us and saying, our customers also have bad connectivity there. We'd like to pay you for that, right? And that's
right.
The best thing to hear for these companies who traditionally only really think about a certain way of doing network planning. I think COVID changed a lot of things around certainly wireless network planning and broadband in general network planning. More people at home, more people in these spaces that have more Wi-Fi, people in not necessarily people working from home but also working near home, and that people sort of moving out of the cities as well. I think all of that has sort of forced these very traditional network builders to rethink how they like expand and contract their network more dynamically to where the demand is. And the nice thing about the Helium network is that we sort of allow people to sort of, there's no coverage here and it's not really needed because there's no demand. Let's just pick it up and move it over to somewhere else. And it's very simple. Or, these days we just allow you to bring your own device. And that like learning also, came from our IoT learnings, like, hey, let's open source the stack. Instead of that now, it's like, let's use every single Wi-Fi AP provider there is and give people like the 15-minute solution to turn that into a Helium mobile network, right? Those are the kinds of things that like, follow the demand and like immediately serve them where they're needed and where it's the most painful for them. And, that's where the product comes.
Right. So Austin, for you guys, you had the benefit of, seeing 3 years of, DeepIn successes and failures to learn from. Like, what did you take away from that, and what have you guys learned?
It's funny. We did not ever conceive this as a DeepIn network in that terminology.
Now or no?
Not really.
Okay.
I mean, like the no action letter from the SEC called it a DeepIn network, so I'll call it a DeepIn network if that's what they want. But like at the end of the day, like DeepIn is a very interesting trade-off. It is generally lower quality service for much higher reach and much higher deployability. A Helium tower is objectively lower wattage than a proper cell phone tower, but you can set it up yourself. You get this incredible coverage. It's like very user deployable. DoubleZero is the opposite. We do not reach anywhere near as far as the public internet, but we reach at a much higher quality of data and much lower latency and much higher bandwidth. And so we sort of flip the DeepIn story on its head, where most DeepIn, you have some sort of trade-off in performance for other characteristics that make up for it. With us, it's kind of the opposite. And so one of the nice things about DoubleZero is all of the contributors and all of the sort of flagship users of it, they basically are begging us for this thing. Like they deeply understand, like the experience you have with AT&T and carriers, 4 years in being like, oh, I get it. We actually need this. With us, we did not even have a deck when we went out to talk to people about this. It was a white paper. And then that's just
old school.
Yeah, it was just straight from there because, you go talk to a Jump or a Galaxy or a DRW or, a bare metal provider, and all the incentives align around building a purpose-built high-performance network that can go faster than the public internet and can remove a lot of the cost and burdens that even bare metal operators and validators have from the public internet.
All right. So, I mean, this started off talking a little bit about the question around how do tokens become valuable. I think one of the interesting things has been the sort of excitement. I wouldn't even call excitement, this use of buy and burn as sort of like one of the ways to return value to the network, and comes up it's sort of in conflict with this core need, which is capital to grow, right? And both of you are sitting here saying, hey, we're just getting started. We've got a long run ahead of us. I'm curious how you sort of think about capitalizing your businesses going forward.
Yeah, so I'm probably going to make some enemies from this, but I think the token buyback DAO model is like completely wrong. It is just a complete mid-curve model.
We're with you.
It is so everyone's like, oh, we want them to be able to have resources to deploy to make the thing more valuable, and it's like it's not doing anything. You're just round tripping money in a very capital inefficient way. And so you either have to do one of two things, in my view. You have to do what Solana did and have a very high inflation rate, use that to offset costs, use that to create an expansion of a network, or you have to have decreasing supply. And this is where buy and burn or some type of burn model, like Solana burns 50% of base fees. That's a great way over the long term to bring these things in. This is exactly what Ethereum did in a different version of it with a lot of complicated formulas behind it that work or don't work depending on how you think about them. But like look at BNB, right? BNB has I think 40% less supply now than when it launched. The only way that works though is if it has all of the economic activity behind it to drive that. And so what's really nice about a buy and burn model is it aligns the growth of usage with the decreasing supply. And a lot of other systems, they don't actually encourage usage, they encourage fees to be high. And we don't actually want fees to be high, we want usage to be high. So, I think that's kind of one model that's important here. In terms of funding these activities of the long term, the foundations, I don't think should be the primary funder of any of this type of thing. It is building robust network economies that, again, weaponize greed to produce positive sum outcomes. This is what we did with our model here for tokens and value accrual. So we took a very different approach than most DeepIn networks. We have no passive emissions. There's no reward for just connecting fiber into the DoubleZero network, we only reward used capacity. And so if you bring a bunch of connectivity to a place where there's no validators and no users, you get 0 payouts from the DoubleZero protocol for that. But just like Bitcoin, if you generate 10% of the hash power, you get 10% of the rewards. And so that's the model we applied here with proof of utility. And that's actually been quite successful in incentivizing competition between network contributors. Because what I want is I want someone to say, oh man, you've got a really profitable fiber line, you're contributing DoubleZero. I can undercut you. I can go in and make it 2% faster. And there I'm going to steal all your rewards. And that's exactly, I mean, it really is like, it's like the Chinese t-shirt factory model applied to high performance networks.
I mean, I think that this concept that you have around weaponizing greed is kind of perfect, right? Like that's exactly what that is. Like, oh, I can, put a, I can put another fiber line next to this other fiber line.
Yes.
This is what finance HFT firms have been doing for years. For us, we kind of we see this happening already, and we've been sort of migrating more and more towards just a utility model as well. Our mobile network is primarily funded by actual utility. If there's a gigabyte of data that goes over, it gets paid, and all that HNT gets paid to that hotspot owner. That is, and I think there's already ideas of how do we push even further on down that curve. For us, we're a little later on in our life cycle. We've been around for longer, but the fact that we're even adjusting like this, I think that's like my favorite part about crypto and about building these kinds of systems, is that they can be flexible. Like before Helium, I worked on Bitcoin stuff, and like that's much harder to do on the time scale. Right?
It is crazy how sort of the immutability of blockchains is sort of for a long time really embedded this idea of making people think they had to have it all figured out. So yeah, I think it is sort of this interesting dynamic where maybe it's not the code so much that is driving the power to actually make these upgrades, but it's more the social capital that gets built around folks like yourselves coming in, talking like this, building the trust with folks. I don't know, actually have a question there.
I don't think you actually need you could actually argue that you don't need the trust. You just need to make sure that every actor is aligned, right? Like, as I started this, I said, I want to give you a free phone plan. And here's what it's going to take. It's very clear what it'll take for me to be able to keep offering that to people. And that's more Helium coverage everywhere, so I can, essentially reduce my COGS for the service, so that I can make this offer not only in the United States, but everywhere else in the world. And so what does that mean? Hey, if you're a deployer of a hotspot, deploy more hotspots, right? So now our incentives are aligned. We like, it's not a detente. It's not negative, right? Like it's entirely like positive sum.
Yeah, interesting. I mean, I think as we come up to the close here with you guys, I am interested. You guys have been around for a while. I feel like we're sitting at this really interesting inflection point. Token prices sideways. People are feeling a little uneasy. Our meme coins are all down. It's easy to look ahead, 2026, 2027. I'm curious just your view of where this market goes and where the opportunity is.
I mean, what we've seen over the last year is, the last 18 months, let's call it, are most of what we considered core tenets of crypto have all failed or eroded, which is, I think,
bullish.
An incredible place to be in, right? Solana had the Rev story. Well, Rev's down a lot compared to what it used to be. Ethereum had this value accrual through L2s. How's that going, right? There's Alta layers. There's all these other things. There's very little value accrual going back now. You look at all these systems across the board saying we need open source systems that are permissionless and verifiable. We don't have that with all the perps dexes, right? We need things that are actually on chain. Well, all of the prediction markets are not really on chain at this point. It's fascinating to see all these, and Bitcoin, right? Bitcoin, like MicroStrategy is going through a very rocky moment at the moment, right? The idea that Bitcoin is the one and only proof of work system that'll ever be at the top, well, Zcash is making a run at it, right? A lot of these like core tenets are changing, which is, I think, the most exciting time to be building, because it's the time when everything's getting shaken up in the industry. I will say historically, when people are crashing out on Twitter and most bearish about crypto and saying this industry is all a casino and a scam, is when the best things get built.
Right. How would you describe this era we're moving into? Or like, what are the new core tenets that people need to hold on to?
I mean, it's a little bit of a meme, but I think we are moving into the greatest era of abundance we've ever seen in crypto. I think we are going to see the work of the last 4 to 6 years on ZK proving and ZK scaling actually come to fruition. There's very cool stuff happening with multi-party compute, especially with near intents nowadays. FHE is like maybe finally real and ready. And so as we look forward to this, like, I don't know, I think there's huge opportunity. I think we are going to see we saw like the boring institutional adoption of crypto. We saw DATs and ETFs and all this crap coming, which like it's useful, it's fine, but it's like classic New York financial engineering, right? We're creating value and we're looping it very effectively. What comes next is, I think, really exciting. It's like NASDAQ and NYSE supporting native Bitcoin trading and native Solana trading. It is the bridge between what is a TradFi market and a crypto market becoming much thinner. It's things like DoubleZero being able to bring the type of TradFi performance these traditional firms expect to an industry like crypto, and just seeing what happens when we cross that chasm. I think the retail story is going to be interesting. I don't think it's going to be that exciting. Like it's going to be more poly markets and Kalshi, and it's going to be like all these really good things for businesses that are building on top of crypto. But those things aren't doing much for actually crypto and actually moving crypto forwards. And that's okay, right? But I think the fundamental foundations there, the cool stuff that's going to happen in the next 2 years is like just getting thought of now.
I think I'll take the other side of that.
All right,
I think
thank
for
you.
retail,
Let's go.
for retail, it's more transparency, more access, maybe less crypto. Like not like seed phrase nonsense, right? Like like we're hiding all the seed phrases. We're not making people have to deal with that nonsense. We're reducing the the wrench attack risk and things like that. Like all those kinds of things that are happening, that's for retail, right? Like that's for the average user. Like my mom doesn't want to know about this like magic cylinder of metal that has all like the 12 words on it, right? Like that's terrifying for her. But what she does want is access to a network. For us, like there's 2 million phones connected to our network every single day, and none of them have any idea that there's a crypto network powering it. And that's exactly what crypto products should be, in my opinion. And so like retail will see the benefit of this as as all this technology comes to bear. Like it is the rising tide movement that gives people more access at more times of the day, potentially, like including when you go to church. And I think that's where retail really that's where they benefit. And ultimately, as prices of things go down, and as you said earlier, which is like when there's a 10x reduction in cost, you get to see brand new businesses and brand new like opportunities for people. That's exactly what retail is going to see in my opinion.
I will say the piece I'm excited on about retail is like it's similar to kind of what you're talking about here. It's that it's really the developing markets. And one of the things we underestimate is you go back to the 90s, less than 50% of US households had direct or indirect ownership of stocks. Right? Less than 50%, right? Now that number is, I think it's over 75%. In the developing world, it's still very small. So if you think about like, we've done all this work tokenizing equities, getting them tradable on Solana, where's the demand? Well, the demand's not there because for most part, people in developing markets, they don't actually understand the opportunity and promise of holding Tesla stock. But there is this interesting theory out there, which I think I might subscribe to, that just like Africa skipped landlines and went straight from no connectivity to cell phones, they may be skipping equities and going straight to meme coins and tokens. And that the idea that we're going to have this intermediary step of like tokenized US treasuries that people in Pakistan are buying, like, I don't know, maybe they're actually just buying Bitcoin.
I thought you were going to say fart coin, but cool.
Well, sure. That's it.
Gentlemen, this was a wonderful conversation. Thank you for kicking us off here on day 2 at Breakpoint. Look forward to chatting with you guys again soon.
Thank
Great
you.
to be here. Thanks for having us. Yeah. Cheers.
Metaplex. This clip brought to you by Metaplex. Launch tokens and NFTs on Solana and the SVM.